Marketable condo, it's really, again, you're buying in Toronto, so obviously it's you're buying in a high density area. It's
Okay.
urban. The banks want to see the condos in good living condition. If it's dated from the early 2000s, the 90s, or even the 80s,
Mhm.
that's okay. Not every condo is going to be up to, or every unit is going to be renovated based on today's decor and standards.
Yes.
The next thing is also the size. The next want to know, like, they want to see the size of the condo to be greater than 400 square feet. Because again, that's what the market kind of attracts. That over time, the size of the condos will come down, but there is a market for people to buy units as small as 400 square feet.
Right. But I have seen units that are smaller.
Well, I have a few banks, case by case, that will consider slightly smaller. But the majority of condos out there, would you agree, Alex, that they are larger than 400 square feet?
Fortunately for now, yes.
Times will change. Again, I remember back in my days, 20 years ago, there was the first condo that was under 800 square feet, and we were thinking,
Wow.
who's going to buy for under 800 square feet? And now we're half that size
800 square feet is like a 3-bedroom condo by today's standards.
by today's standards. 20 years ago, it was not.
Maybe
But
2-bedroom. I'm joking. But, okay.
But the most important, one of the key things for when it comes to marketability of the condo is the status certificate. Does the condo have a good reserve fund, or does the condo have deficits on their balance sheet? That's a very important way to identify how marketable the condo is. Now, all condos are, you can't get financing almost on all condos, but the banks will look at that, and that can make an impact with regards to whether they want to lend money on that property or not. So it's important to have that status certificate reviewed by a lawyer, and you get to know that in advance before you go into the property.
Right. So kind of like the same way how the bank will do your due diligence on you as a buyer, they also want to do their due diligence on the building itself to, make sure they're lending on a good building that's well maintained and has good financial resources.
Exactly.
They're protecting their investment.
You hit the nail on the head. That's exactly it. That is their collateral. That is their security. If something were to go wrong,
Yeah.
that's where the money's secured. So they want to know it's on a good property.